This question comes from Chai Gohil. He writes, this is for Ajit. Reinsurance industry is going through one of the hardest pricing environments in the last 15 years. Berkshire historically has participated during these stress times when economic returns are very attractive. This year, it appears Berkshire has not been interested in deploying its resources towards property cat reinsurance despite such strong returns. Can you elaborate on reasons for not participating despite these returns? And your broader view on how you're planning to shape your reinsurance business post-acquisition of Allegheny.
Okay. In terms of Allegheny, that's an easy response. We treat our operating units independent of each other. And as far as Allegheny is concerned, they have a major presence in the reinsurance business under the brand name of Transatlantic Re. That company will operate the way it's been operating in the past. There'll be no change in terms of strategy or management, and they will keep doing what they're doing. They've been very successful, and hopefully they'll keep being successful. Now, in terms of the property cat business that I have been active in over these last several years, you are right that the last 15 years has been a difficult time. Prices have not been attractive. And even though we have had some presence in the property cat business in the last 15 years, it really is been minimal. This December 31st, which is a big renewal date for cat reinsurance, we were hoping that we would get a few days in the sun and we'd be able to deploy our capital and be able to write some fairly attractive business. As it happened, towards the end of December, till about the third week of December, I was very optimistic that we would get a chance to put several $1 billion on the books. But in the last 10 days of December, unfortunately, a lot of capacity came out of the woodworks. Pricing that we were expecting to realize didn't really come and meet our pricing requirements, as a result of which January 1 was a big disappointment. We did not write as much as we were hoping to write. Now, fast forward to April 1, which is another big renewal date. We had a lot of powder dry, and we were lucky that we kept the powder dry, because April 1, suddenly prices zoomed up again a lot higher than what they were on January 1 and started to look attractive to us. So now we have a portfolio that is very heavily exposed to property catastrophe. To put that in perspective, our exposure today is almost 50% more than what it was 5-6 months ago. So, I think we have written as much as our capacity will allow us to write. We are very happy with what we've written. The margins have been healthy. The only thing that I want to mention to you is that while the margins have been healthy, we have a very unbalanced portfolio. What that means is if there's a big hurricane in Florida, we will have a very substantial loss. As opposed to that, if we have a very big loss anywhere other than Florida, relative to our competition, we will have a much smaller loss. Net, I'm very happy with the portfolio. It's been a lot better. It is a lot better than what it's been in the past. I don't know how long it'll last. And of course, if the hurricane happens in Florida, we could lose, across all the units, we could lose as much as $15 billion. And if there isn't a loss, we'll make several $1 billion as profit.
And G, tell them how long, when you called me and said you'd like to expose us to whatever it was, a couple billion more of exposure, how long I took to say yes.
Yeah. So the way we think about our exposures, in the property, in the insurance operations collectively across the entire company, given that we have about a little less than $300 billion of GAAP capital, we think of that as a 5% exposure that we're willing to take on. So, to complete Warren's story, a few weeks ago, we had about $13 billion of exposure all across the globe. And I called up Warren. I said, we're up to 13. It'll be nice if we can go up to 15. That's a good round number. And that was less than a 30-second phone call. I think Warren said yes without even listening to what the numbers were.
I hope he calls me again. Okay, station 8.
Hello. My name is Adal Flores, and I've been a shareholder for about 16 years, and I'm coming from Guadalajara, Mexico. My question is for Warren and Charlie. Companies have the eternal dilemma between building products that can make profits and increase their company competitive position. In the best case, you can build products that have both characteristics at the same time, like Google did. But most of the time, companies need to choose between short-term profits and long-term defensibility. For example, Amazon was focused on building their famous Amazon flywheel with limited profits initially in order to obtain stronger network effects with the hope of getting more defensible profits in the future. When you invest, you constantly speak about the importance of building competitive moats. What advice would you give to CEOs about how to balance this dilemma, which is essentially short-term profits versus long-term defensibility? Thank you.
Well, the answer is to control your destiny, which we've been able to do at Berkshire. So we feel no pressure from Wall Street. We don't have investor calls. We don't have to make promises. We get a chance to make our own mistakes and occasionally find something that works well. But we recognize that the people in this room and people like them are the ones that we're working for, and we're not working for a bunch of people that care about whether we meet the quarter estimate or anything. So we have a freedom that we get to use, and we're interested in owning a wonderful business forever. Well, there aren't very many wonderful businesses, but we do learn a lot as we go along. Charlie and I have often mentioned how we learned so much when we bought See's Candy, which we did. But we learned when we bought Ben Rogers' chain of women's dress shops spread all over the eastern part of the country. We learned when we tried getting into the department store business back in 1966, and as the ink was drying on our purchase price, we realized we'd done something dumb. We're learning all the time how consumers behave. I'm not going to be able to learn the technical aspects of businesses, but that'd be nice if I knew it, but it isn't essential. And we are obviously we've got a business at Apple which is larger than our energy business, and we may only own 5.6 or 7%, but our ownership goes up every year. And I don't understand the phone at all, but I do understand consumer behavior. And I know how people think about whether to buy a second car. I know how they go out to different. We own auto dealerships. We're learning all the time from all of our businesses how people react to granimals versus selling them something else. And so See's was a sort of breakthrough, but we just keep learning as to more about how people behave and how a good business can turn into a bad business and how some good businesses can maintain their competitive advantage over time. So we don't have some formula. Berkshire people, but we can also tell in 10 seconds whether it's something of interest. I mean, when I get these calls and we want to send decks and all that sort of thing, which is nonsense. I mean, it's a bunch of guys sitting that get paid for drawing up these projections of the future and everything like that. If they knew the future, we don't know the future, but we do know certain kinds of businesses. We know what the right price is, and we know what we think we can project out in terms of consumer behavior. and consumer and threats to a business, and that's what we've been about, and that's what we'll continue to be about. We don't get smarter over time. We get a little wiser though, following it over time, and you can do it while sitting in the office with a telephone too, which we like. Charlie?
Well, tell them the story of the Japanese investment. That should be told again. That's a nice story.
Well, it was pretty simple. I mean, back when I started, other people were going through Playboy, and I was going through Moody's, basically. And there's a movie out called Turn Every Page, which I saw again for the second time a couple of days ago, Lizzie Gottlieb, and I recommend everybody in this world watch that, because I turned every page in the past. And I did it for thousands and thousands of pages in Moody's, and I did it at the Department of Public Utilities in Boston. I did it in the insurance department. You just kept turning pages. Well, that goes on for a while, but now we need big ideas in order to find things. And what was your question, Charlie?
Tell them about the Japanese.
Well, the Japanese thing was simple. I mean, I like looking at companies. I like looking at figures about companies, and here were 5 very, very substantial companies, understandable companies. Most of them, maybe all of them, we'd done business with in a dozen different ways. If you go a couple miles from where this place is, our last coal generating plant was built by one of the companies. So here they were sitting as a group where they were earning, we'll say 14% on what we were going to pay to buy them. They were paying decent dividends. They were going to repurchase shares in some cases. They owned a whole bunch of businesses that we could understand as a group, although we didn't mean we had deep understanding on anything, but we seen them operate and everything. There wasn't anything to it. And at the same time, we could take out the currency risk by financing in yen, and that was going to cost us 0.5%. Well, if you get 14% on one side and 0.5% on the other side, and you've got money that, forever, and they're doing intelligent things, and they're sizable, so we just started buying them. I didn't even probably tell Greg until maybe 6 months after we'd gotten going, and then when we hit 5% in all of them, we announced on my birthday and at 90th that we owned over 5%, and recently went over for the first time to visit with them, and we were more than pleasantly surprised, delighted with what we find there, and now we own 7.4% of it. We won't go over 9.9 without their agreeing, and we sold another 164, whatever it is, billion of yen.
Would have done for us if we only had $5 billion or something, and it made $10 billion simply in that way.
Yeah.
We would look like heroes. Now $10 billion just sort of disappears as a little dot in Berkshire's reports.
But it's fun.
And it is fun, and it is $10 billion.
And Charlie says it keeps me out of bars when I talk to him about it. And I probably talked to Charlie about this the year after I started. But who knows? I knew he'd like it. Obviously,
we tried to do every dollar we would do. We could only do about $10 billion.
Yeah. Well, not even quite that much.
Yeah.
But we are $4 or $5 billion ahead plus dividends, and we got a carry that's terrific, and they welcome us, and they should welcome us, but we love it the way they're operating. We're not there to tell them what to do in the least. So we did, but we did say we never go over 9.9, and we mean it, and they know that we'll be true to our word. And I went over there partly to introduce Greg to those people, because we're going to be with them 10, 20, 30, 40 years from now, and they may occasionally find something that we can do jointly. And they look forward to doing that, and we look forward to it. And in addition, we have some other operating businesses in Japan. So, Greg, do you have anything?
The only thing I would add is that, one, as Warren, you went over there, it was to build the trust with these Japanese companies, because we do hope there's long-term opportunities. But fundamentally, as you highlighted, they're an incredible, they've been a very good investment. I'd also highlight the 5 meetings we had were really quite remarkable. I mean, these companies, the culture and the history around it and how proud they are, there's just moments of learning from them. So it was just a great experience to spend really 2 days with the 5 companies.
And an issue that we intended to be 56 billion of yen that we were issuing and selling turned out to be 164.4 or something like that. Everything's worked so well, and as Charlie says, it doesn't move 500 billion of net worth that much. But this one is, it will keep adding over the years to Berkshire's value with this very widespread, probably $400 or $500 million a year. And, we'll just keep looking for more opportunities. And Japan, Berkshire is the largest borrower corporate borrower outside of Japan that exists. And we didn't set out to be that, but it's turned out that way, and we're not done. I mean, in terms of what may come along there, and we have some direct operations there, as I mentioned, and we've got some really wonderful partners working for us, and I don't have to do anything. Okay, Becky.
Mr. Buffett and Mr. Munger. Hi.
Hi.
My name is Daphne. I'm 13 years old, and this is my 6th annual Berkshire Hathaway shareholders meeting. And I've had the privilege to ask you both questions in years past. My question for you today is the following. As you know, the U.S. national debt is currently at an estimated $31 trillion, making up about 125% of the U.S. GDP. In the meantime, over the past few years, the Federal Reserve has telegraphed that they intend to monetize the debt by printing trillions of dollars, even as they insist that they're fighting inflation. Already, other major economies in the world, such as China, Saudi Arabia, and Brazil, are moving away from the dollar in anticipation of this. My question is, are we likely to face a time in the future when the US dollar is no longer the global reserve currency? How is Berkshire prepared for this possibility? And what can we do as American citizens to attempt to shelter ourselves from what's beginning to look like the beginnings of de-dollarization?
Well, I should ask you to come up here and answer some questions. I mean, it's very interesting. I mean, we are the reserve currency, and I see no option for any other currency to be the reserve currency. And I think that nobody understands the situation better than Jay Powell. And but he's not in control of fiscal policy, and every now and then he drops a few hints. And there was no question that when the pandemic broke out, I mean, it was a semi-war-like situation, but nobody knows how far you can go with the paper currency before it gets out of control. And particularly if you're the world's reserve currency. Nobody knows the answer to that. And you don't want to try and pick out the point at where it does become a problem, because then it's all over. And I think we should be very careful. I mean, we all learned Keynesianism, and we applied it in World War II to the advantage of the country, and we did everything we could to prevent inflation during the war. And then the war ended in August of 45, and I think in January 46, and I'm not giving you exact figures at all now, but in January 46, I think the rate of inflation was at something like 1% or thereabouts. And by the end of the year, I think it was at like 15%. And again, I'm doing this from long memories, but it's easy for America to do a lot. But if we do too much, it's very hard to see how you recover once you let the genie out of the bottle and people lose faith in the currency. And they behave in an entirely different manner than they do when they feel that if they put some money in the bank or have a pension plan or whatever it may be, that they're going to get out something with roughly equal purchasing power. And it just changes the economy, and all kinds of things can happen then. And I can't predict them, and nobody else can predict them, but I do know they aren't good. And we will see. And I do this as I voted for both parties, and it's not limited to politicians of either party or anything of the sort. People take positions. Some of them understand what they're doing. Some of them don't understand what they're doing. If they put me on some medical board, I don't understand what I'm doing. It's not that there's nothing wrong with the fact that you can't master everything. You can't all be Isaac Newton, but you can't go around pretending you do or making decisions on it. And we are not as well off in relation to curbing inflation expectations, which become self-fulfilling, and we are not as well off as we were earlier. And Berkshire is better prepared than most investments for that kind of a period. But I said this in the annual report, but we aren't perfectly prepared because there's no way to perfectly prepare. You don't know what course of action will occur. And it's a very political decision now. It's a tribal decision to some degree. And you hope for leadership that actually will do something, recognizes the problem. And America's an incredible society, rich. We got everything going for us, but that doesn't mean we can just print money indefinitely as debt. And it'll be interesting to see how it turns out. Charlie?
Well, at some point, printing money to buy votes will be counterproductive.
Yep.
And we don't know exactly where that comes. And if something is going to be dangerous and unproductive, you ought to keep it a fair distance away. Now, if you have a culture that is exceptionally strong, like Japan, they have done some strange things there.
But they couldn't have been the reserve currency.
No, of course not. But Japan bought back most of the national debt and a lot of the common stocks, and debt. Just the Federal Reserve owns practically everything in Japan, and the country's working. It's had 30 years of economic stasis, but it's not going to hell. I really admire Japan, but I don't think we should try and imitate it. I don't think we're as good as Japan at taking.
They have a cohesive culture, and we don't, Charlie.
Yeah, that's exactly right. Yeah. In Japan, everybody's supposed to suck it up and cope, and in America, we complain.
So I hope you come next year with a tougher question. And thank you. And I predict I would love to be being born again today in the United States. I mean, we can do a lot of dumb things and get away with it. We can't do an unlimited number. There are people who care about that, and you have to be willing to be extraordinarily unpopular. I mean, Paul Volcker. There are other Federal Reserve chair people that would not have done what he did. It's just it's too uncomfortable. And there used to be a politician in Nebraska, and if you asked him some really tough question like, how do you stand on abortion, or he would look you right in the eye and say, I'm all right on that one, and then he moved next. Well, that's what people have done, basically on inflation. And they one way or another, they say I'm all right on that, and then they don't really think about what the consequences of their actions could be, particularly. And it's so much fun to, if there's 435 of you, to just be one of 435 instead of being the person actually responsible. Anyway, I am still, next to the question of two superpowers, and when you get into really destroying a planet, destroying the reserve currency of the world when there's really no substance, and forget about all the toys, I mean, it's a joke to think of any tokens or that sort of that's madness. But it's also madness to just keep printing money. Yeah, and we know how to do it, and we actually came from a money printing economy in World War II, which was required, and we suffered significant inflation. The price level, I mean, there's a million ways to judge it, but it's maybe 10 times what it was then or something like that. Well, that's getting close to the edge of where you don't want to hold dollars anymore. You want to hold something else. You want to hold real estate. You want to hold an interest in a business. There's a lot of good. Your best defense is your own earning power. If you're the best doctor in town, if you're the best lawyer in town, if you're the best teacher in town, or even if you're the 10th best or 10th, you're going to make a good living. I mean, the economy is productive, and you will succeed with your talents, but you won't succeed by hoarding dollars. You'll just succeed by the fact that your value to the community, which is a rich community overall, is sustained. And so the best investment is always in yourself. That's the answer I would give you.
Well, we have a situation where we've learned to print money in gobs and let a big chunk of our young people go right into wealth management. This is
like we did.
Yeah, like we did. Yes, we've had bad examples. And I want to say that I didn't realize wealth management was going to get so big when I went into it. And I want to apologize for what's happened.
Yeah, well, anyway, you did well. Becky.
This question comes from Gary Gambino in Parma, Ohio, who says he's been a Berkshire shareholder since 2004. He says the amount paid this year for the 41.4% stake in Pilot values the entire company at around $19 billion. That's about 6 times what BP is paying for Travel Centers of America, but Pilot's market share is just 3 times Travel Centers of America's. Was it a big mistake to base the final price on 2022 earnings, which has unusually high fuel margins?
Yeah. Well, that's a very good question, and the answer is that we arranged to buy it in 3 stages, with the 3rd stage being at the option of the owner of 20%. The first stage, we bought at what turned out to be a very attractive price. The 2nd stage turned out to be a very good year for the diesel business, which means that the seller got a very good price. And I would say that overall, we feel very good about the fact we own the 80% at the price that we do, but we would have rather owned, better if we just bought the 80% to start with. And the last 20%, the seller has the option, and that's always an unintelligent way of structuring something. We've had that arrangement with other, well, we had it with the Furniture Mart. We bought 80% of the Furniture Mart on August 30th, 1983, almost 40 years ago, and it's worked out perfectly. But when you give the other person the option, they've got some advantage. We have 80% now of a business we like very much, and the comparison to Travel America is really spurious, because Travel America not only much smaller, but they rent all their properties. We have hundreds and hundreds of locations on the interstate that are zoned for what we commercial, and maybe 15 acres or 12. There's nothing like it, and they're not going to move the interstate 2 miles to the right or something, or anything of the sort. So we've got a position that travel. I mean, BP may or may not have made a fine deal. I've read the prospectus, and I can understand. I mean, it's a big source of output for BP, but I like the management we have had at Pilot. I like very much the fellow who's coming in. That's the new CEO. I just have to tell you a little bit about Adam Wright, who's taking that job on. He came from Omaha. He wasn't selected because he came from Omaha. He came from Omaha. He came from North High, a public school that my wife graduated from. I've got grandchildren that graduated from there. He went to the University of Nebraska and almost set the rushing record in football, which will never be beaten because they've given up football, but I think he rushed for maybe 3,600 yards. He held 3 jobs while he went through there. He interned at Mid-America 20 years ago. His mother worked to put him through school. I mean, it's Horatio Alger squared, and we have him to manage Pilot, and the Haslams have given us a wonderful business. Big Jim, and my vintage. I mean, great people, and here we are. And I'm very glad we own Pilot. I just wish we bought 100% of it when I first made the deal, but that was not the deal.
Warner wasn't for sale.
It wasn't for sale. Yeah. And incidentally, the last 20% of the Furniture Mart wasn't for sale when we bought it, so we bought 80% of it, and that's worked out well. And we've done various deals various ways. The best way to do it is just write people a check and get the stock. But we did that with TTI, but you can't always make the same deal. If we like the business well enough and the people well enough, we will tailor it differently. But our preference is to write a check and own the whole place and keep the management in place. Got anything to add on it?
No.
Yeah, I hope. It's really wonderful to watch something like Adam Wright work. I mean, basically, I don't know what his mother was earning, but he went to North High, which is probably 4 or 5 miles from here, public school graduate, and worked his way up, went for a short period to Pacific Gas and Electric, and we brought him home to run Pilot, and Pilot, the prices on diesel were way different last year. Pilot is close to $80 billion of sales last year, but more normal prices. It's significant, and it's half that or thereabouts, maybe a little more. But he is, I don't know how old Adam would be, but he's in his 40s, and he came up through the organization that Greg Abel was involved with, and now here he is running a very major business. And it's good at Berkshire to be able to do that, and I don't, somebody else may have gone to more prestigious business schools or anything. So what? We've seen what Adam can do. Okay, station 4.
Good afternoon, Mr. Buffett, Mr. Munger. My name is JC. I'm 15 years old, and I'm from Ohio. This is my 4th in-person Berkshire meeting. I have a lot of passion learning from your speeches, interviews, and articles. Thank you for sharing your wisdom all the time. Mr. Buffett, in your annual shareholder letter this year, you said that Berkshire's journey consisted of continuous savings, the power of compounding, the American tailwind, and avoidance of major mistakes. You have humbly admitted in the past that you have made many mistakes, but this is the first time that major mistakes stood out to me. Could you please advise us on what major mistakes we should avoid in both investing and in life? I would also like to have Mr. Munger's thoughts too, please. Thank you very much.
Well, Charlie said the major mistake you can make, then you're lucky if you're in the United States. If you go around the world, you don't have a lot of choices in some places, but you should write your obituary and then try and figure out how to live up to it. That's something you get wiser on as you go along. The business mistakes, you just want to make sure you don't make any mistakes that take you out of the game or come close to taking you out of your game. You should never have a night when you're worried about investing. I mean, assuming you have any money to invest at all, and you should spend a little bit less than you earn, and you can spend a little bit more than you earn, and then you've got debt, and the chances are you'll never get out of debt. I'll make an exception in terms of a mortgage on your house, but credit card debt, we're in the credit card business big time, and the world will stay in the credit card business. But why get behind the game? And if you're effectively paying 12 or 14 or whatever percent you're paying on a credit card, you're saying I'm going to earn more than 12 or 14% of money, and if you can do that, come to Berkshire Hathaway. So it's I hate to say this when Charlie's around me, but it's straight out of Ben Franklin. I mean, and it's not that complicated, but I'll give you a couple lessons. Tom Murphy, the first time I met him, said two things to me. He said, always tell someone to go to hell tomorrow. Well, that was great advice then, and think of what great advice it is when you sit down at a computer and screw your life up forever by telling somebody to go to hell or something else in 30 seconds and you can't erase it. And you haven't lost the option. And he said, praise by name, criticize by category. Well, what makes more sense than that? I mean, who do you like that criticizes you all the time? And you don't need to vilify anybody to make your point on subjects of discussion. And then I'll give you another general piece of advice. I've never known anybody that was basically kind that died without friends. And I've known plenty of people with money that have died without friends, including their family. But I've never known anybody. I've seen a few people, including Tom Murphy Sr., and maybe Junior, who's here, but certainly his dad. I never saw him. I watched him for 50 years. I never saw him do an unkind act. I didn't see him do very many stupid acts either. I mean, it wasn't that he was non-discriminating. He just decided that there was no reason to do it. And wow, what a difference that makes in life. Charlie?
Well, it's so simple to spend less than you earn and invest shrewdly and avoid toxic people and toxic activities and try and keep learning all your life, et cetera, and do a lot of deferred gratification because you prefer life that way. And if you do all those things, you are almost certain to succeed. And if you don't, you're going to need a lot of luck. And you don't want to need a lot of luck. You want to go into a game where you're very likely to win without having any unusual luck.
I'd add one more thought, too. You need to know how people can manipulate other people, and you need to resist the temptation to do it yourself.
Oh, yes. The toxic people who are trying to fool you or lie to you, who aren't reliable in meeting their commitments. The great lesson of life is get them the hell out of your life.
Yep.
And do it fast. Do it fast.
And I would add, Charlie would totally agree with me. Do it tactfully if possible, too. But do get them out of your life.
Yes. Yeah, I don't mind a little tact. Or even a little financial cost. But the question is getting them the hell out of the life.
Okay. Becky?
All right, this comes from Roger Lee Tan. He says, my name is Roger from Hong Kong, a long-term shareholder of Berkshire, admirer and follower of Mr. Buffett's and Munger's wisdom and principle. Both of you have said before that the most difficult problems in life are always people problems, and one of the key lessons you have learned to be able to live a happy life and a successful life is to stay away from negative people. My question is, what to do if those negative people are your families, the people whom you can't simply stay away from?
Yeah. You minimize it. But you can't, no, I mean, there's no question about it. Charlie gave an answer I thought was a master of tact the other day when he says you always ought to interact with people who behave well. He says, of course, you have to make some exceptions to your family. But but it's true. And, you know, you really, I don't know what it's like to have, you know, a drunken, you know, bullyish, probably father, but parent just generally. I mean, you know, how do you handle it? It's very interesting that the MacArthur family, the very famous John MacArthur, the man who set up the MacArthur Foundation, he had 5 kids, and 4 of them turned out to be superstars of one sort or another, and they had this crazy itinerant drunken father, but they all decided that the thing to do was get the hell out of the house. and so you had the father of the MacArthur Foundation that did that along with 3 of the siblings out of 5. So, you know, I was lucky. I mean, Charlie was lucky. You know, if you have I mean, our father saw plenty of shortcomings in both of us, but, you know, it would still be there for us. And if you have one that won't be there for you, you know, it's a very tough problem. And I think one way or another, I probably would have gotten through that if I had that situation. But I think my life would have been a lot different. Charlie?
I have nothing to add. We're
Okay, station 5.